Now, Deepak Shenoy is founder of Capital Mind. He's joining us to take some questions. Deepak, great to have you with us here on the program. Thanks very much. We're in the midst of a bit of a pullback. Just a quick word on what you make of the market at this stage. Did it stretch too far on one side? Were you expecting this? How far? Any thoughts near term?
Thanks, Prashant. I think, firstly, I didn't expect this. I don't think it'll be fair for me to say I've expected this. But, markets are designed to overstretch in either direction. So they'll fall a little too much. They'll go up a little too much. I think part of this going up process was the global recovery, which is when markets all over the world started to recover, and part of that recovery process was where India also kind of benefited from it. We saw FII flows reverse. This last 2 days of a fall, at least today we don't see the USD INR hurting quite as much as perhaps some of the other currencies are. So it seems to be relatively benign on the USD INR front, but it's possible that some part of this was MSCI rebalancing expectations in certain banks. We've seen a few other, the lack of positive news flow that possibly highlighted most of last month because we had a fairly good reasonable earnings season this time. I think all of that put together, we're just coming, it's a small 3% decline. I don't think I'd read too much into it.
Okay, all right. Deepak, I wanted to ask you about quite a few stocks, but let's talk about a couple of rare names that we normally don't discuss. Suzlon is suddenly up close to around 10%. Plenty of chatter, but I don't know what's going on there. They're talking about bringing down debt, raising fresh capital. If any view at all out there. And also the other one is Borosil Renewables. The management joined us on the show a few days ago, and they sounded optimistic that anti-dumping duty will get extended and the solar glass industry will be protected. Unfortunately, that's not happened. So that's what's going to raise some competition. The stock is down 3%, but it was down close to 5.5% earlier. Any view of any of these two stocks?
So we don't track either. Again, Suzlon, I think, I don't even know the stock price right now. But I don't know anything that's kind of changed anything over there. With Borosil, I think the impression that the anti-dumping would continue was there, and we'll have to see how financials change now based on this. And in general, our biggest import in some of these areas is from a country where we're not trying to encourage too much of the imports in any case. So I think they might. I mean, they've done fairly well in the past, but let's see how they do now that this duty has been removed. So if I were to be considering buying them, I'd probably wait for this quarter's results before I took a longer term decision on this. But to be honest, the management has more or less delivered in the past. So I'm hoping that they'll do well now also. I don't have a position.
Got it. Deepak, hi, good afternoon. Kotak in particular, I know today is the FTSE impact, but it's not as if the stock had been doing well. In general, I mean, it's been an underperformer for better part of last 2 years. What to your mind is going wrong here?
Yeah, we own the stock, so I'm hoping that the going wrong part will come back, Anuj. But I think there's been a very large impact in general in banking. So if you see almost all banks, they seem to have underperformed, other than ICICI, which we also own, but the corporate banks seem to have done better than the retail banks. And I think here there's a bunch of things around competition that's coming from smaller NBFC lending through startups and through NBFCs themselves, like Bajaj, doing really well in retail lending. And also that their corporate franchises haven't improved substantially. 2 years ago, when RBI brought in a rule that said you have to at least be 10% of the lending of a bank, of a corporate, in order to be able to own a current account in that bank. So some of these banks, Kotak and HDFC included, because of their relatively rigorous lending standards, they aren't able to participate in some of the corporates' lending books at 10% level. So I think that might also have slowed them down. But I think the future ahead is pretty good for them. They have a fairly good franchise. Their CASA levels are fantastic in comparison with most of the rest of the industry. As a whole, the industry has 10% CASA or 10% current accounts, 30% CASA roughly. These guys have much more than that. So I think that way they're poised for greater growth going forward. But then I'm biased. I own a position. I think they're one of the best retail banks around, is Kotak specifically. And they're more integrated. They have everything from the AMC to the insurance to all of the bits in the bank itself, rather than a holding company.
Okay, all right. Deepak, we want to talk about steel stocks. But before we get to that, DB Corp, do you track that? You don't track that well. The reason I asked you is because there was an asset that Adani Power bought from DB Power. And I think it's a similar promoter entity. So the way the street is reading it is that the promoter entity is getting stronger. So maybe some indirect support. Directly, I don't think there's much of a relation between the two. But from the word go itself, the stock was up close to around 15%. But Deepak, coming back to you with a couple of queries on steel. Now the steel pack, they're in focus today on the back of a cautious note that came in from Credit Suisse. And they remain cautious. They also have an underperformed rating on JSW Steel and a neutral rating on Tata Steel. They believe that spreads are likely to revert to historical averages and also much lower than last year's peak. They see a risk to the regional prices with weak Chinese property data that's been coming out. They've also given three broad reasons. And let's start off with pricing. On pricing, they see a significant risk to domestic steel prices as they highlight that FTA prices have fallen by roughly around $85 per ton. And 50% of India's imports come in from these FTA nations. Now, Indian steel prices are now at a 19% premium in comparison to FTA import prices. That compares with around 2% historically. Additionally, they say that the European steel prices have corrected by close to around $40 per ton in the past 1 month, obviously on weakening demand. Now, point number two is that coking coal costs, that has been losing its way. It's come down from around 600 all the way to around 200. Suddenly, it's rebounded by close to around $70–75 on a per ton basis. Going ahead, that will hurt spreads. And finally, Chinese net steel exports, they continue to remain elevated. They're up close to around 27% on a year-on-year basis in July, which is a risk for global steel prices as well. The problem is further compounded because of the weak data that's coming out of China. Put all these factors together, and it seems to be having some bit of a bearing on steel stocks. Deepak, your take. Some of these stocks, to be fair, have seen a good recovery from the recent lows. But if international prices are going to be under so much pressure, China is going to be exporting more, then, this so-called turnaround structural story that could be playing out, well, it seems to have gone out of the window. But what's your take on these stocks?
I think you've pretty much spelled the dismal note in the near future, at least for these companies, because it may not be Chinese imports. It's Korea and Japan that are a bigger risk for India. And Russia's out of the game right now. But at some point, they could also come back in if the sanctions are removed or something like that. But Chinese exports, India's prices being way higher, 15+% more than some of these other countries. The fact that these countries continue to provide subsidies to their steel exporters, which will bring the landed cost of steel in India at a much lower point. We have an export duty, not an import duty right now, I think, on steel. The prices on the stocks seem to reflect the higher EV to EBITDA or higher EBITDA expectation going forward. I think last year was an anomaly, and the higher energy costs that hit them earlier this year and will hit their margins now in a different way by lower revenue realizations because prices come down. So I don't think it's a good part to enter the steel cycle. Maybe when prices are at rock bottom and people are saying that it's the end of the steel story is when you should get back in. But I think I won't touch the steel cycle right now. I think it peaked earlier this year. I'm not been interested in steel since then.
Okay, just a word on the market, by the way. Just hit fresh intraday lows on the Nifty, 17,525. And this time it's not mainly because of banks. This time it's because of IT stocks. Infosys in particular is seeing a bit of a decline. And even look at Adani Ports intraday. That was one stock, in fact, the entire Adani group, which was sort of holding out. There is Infosys. I think Adani Ports is the other one, which you may want to look at. Just all of a sudden, there's a sharp knock that you've seen on that stock. Tata Motors, Prashant, is the other one. State Bank of India. So across the board, and the market breadth today has been quite weak, actually.
2:1.
Yeah,
2.5:1.
Yeah.
In favor of declines. No, absolutely. So lots of names. Trent is down 6%. Look at Jubilant Food, and these are all big volume-led losses. India Mart is down 4%. Varun Beverages is down 6%. Sale, Jindal Steel, of course. Godrej Properties is down 4%. Havells is down 4%. So they're the large well-traded mid-caps that I'm talking about. Deepak, are there, if this is, of course, another round of selling, which maybe is not as sharp as what we saw back in June, but is meaningful, what would you want to buy in this round if it were to turn out to be, if you missed buying something that you wanted to in the first round? Many would have, right? What would be on your shopping list?
So I think, if they were to continue to drop a lot more, IT continues to be attractive, where we went off of some of the IT names earlier, but we're still starting to build back positions. I think that would be good. The banks themselves, like we've talked about, some of the, like the Kotak Bank, and the HDFC Bank, I'm a little nervous because of this whole deal thing, but it's still if it were to fall 20-25%, that's when it'd be more meaningful. Some MNC companies with operations in Germany and India, where we believe that some of the operations will move to India or slightly start to move to India. They're not going down for some reason, whether it is Siemens or KSB or any of these companies. But I think they will be an attractive pick because the leverage and the relatively high difference between what they do in India and Germany can be quite impactful for the stock price if that moves. That's about it right now, but I think everything's come to a point where it's reasonably valued, not unfairly too low in terms of valuation. But we do have an interest in gold finance companies. I know that people have been saying people move to banks. My data says people aren't moving to banks. So, it's actually a point where some of these companies might actually get attractive from the NBFC sector. They're one of the few attractive NBFCs that are out there.
Okay, well, just one more word. Just put out intraday chart of IEX, and this is one of the weakest stocks in the market now. Even in the entire market recovery, this is one stock which has not really participated as much, and is still very close to its recent lows. And clearly, the market is worried about what's happening here. Platform company, Deepak, also a stock which sort of topped the list when we saw the valuation reset for some of these platform companies in the higher interest rate environment. Any view on IEX?
We used to own it. Very recently kind of exited this, waiting for a better time. I think it's a good long-term story. Valuations may be a little high right now, but I think there are some fears right now, even now. Although the recent thing that happened with respect to government telling states they can't purchase power on IEX or any of the open markets unless they pay up their past dues. And the fact that 80% of those dues were paid within a day, it actually augurs very well for the sector. And I think this might be an interesting play, even if it falls now or for whatever reason it is. I think longer term, this is going to be a very interesting story. Relatively or no debt, it's got negative working capital in that sense. But more importantly, that it's a platform where one of the most valuable resources will be exchanged. Players are institutional. Default risk can be curtailed by this carrot and stick approach that the government has. You might end up seeing this going up quite tremendously in a 5-year time frame. But in the short term, I think it will do badly because of the valuation right now.